This episode is going to discuss the different methods that can be used to calculate bad debt expense under the allowance method. Recall there are two methods that I previously introduced to you that a company can use to calculate their amount of bad debt expense for the accounting period. Regardless of which of these methods that are used, percent of sales method or one of the accounts receivable methods, the journal entry at the end of every accounting period will always be the same. It will always be a debit to bad debt expense and a credit to the allowance for bad debts. The first method, the percentage of sales method, calculates bad debt expense based on some percentage of sales. So if ABC has credit sales of $1.4 million in 2019, current period sales of $1.4 million, and management estimates that 0.5% of those credit sales will eventually prove uncollectible, the bad debt percent calculation will be 0.5% or 0.5%. That will help us calculate it, how much bad debt expense to record for the period. So 1.4 million times the estimate uncollectible of 0.5%, $7,000. ABC computes estimated bad debt expense of $7,000. So the adjusting entry to be made at the end of the period will be debit to bad debt expense of $7,000, credit to the allowance for doubtful accounts of $7,000. Calculating bad debt expense under the percent of sales method is a one-step process. Using the percentage of accounts receivable method, it will require two steps to calculate bad debt expense for the period. The first step is to calculate the desired ending balance in the allowance for doubtful accounts. And that is by taking the year-end accounts receivable balance and multiply it by the percentage of that balance estimated to be bad debt. Once we know that estimated balance that is needed in the allowance for doubtful accounts that we calculated in step 1, we will compare that to the current balance that is unadjusted in the allowance for doubtful accounts. And the difference between the estimated or the needed balance and the unadjusted current balance will be the amount of bad debt expense to record. So if ABC at the end of the year has $100,000 in accounts receivable and currently an existing $900 unadjusted credit balance in the allowance for doubtful accounts as of the end of the year. Based on past experience, management estimates that 4% of its receivables will be uncollectible. We need to calculate the amount of bad debt expense ABC needs to record for the year. So, first step is to take the balance in accounts receivable and multiply it by the percentage uncollectible. $4,000 is the needed balance or the desired ending balance in the allowance for doubtful accounts. The second step is going to be to compare the needed balance to the current unadjusted balance. Currently there's a $900 unadjusted balance. The difference between a current credit balance of $900 and a desired credit balance of $4,000 is $3,100. That means ABC needs to debit bad debt expense for $3,100 and credit the allowance for doubtful accounts of $3,100. Thus, they estimate their bad debt expense to be $3,100. When that is recorded, it will bring the balance in the allowance for doubtful accounts up to its needed balance of $4,000. The aging of accounts receivable method is really just a variation of the accounts receivable method of calculating bad debt expense. The only difference is, instead of calculating the entire accounts receivable overall balance by a percentage uncollectible, we take each receivable, each customer's account, and group it by how long it is past its due date. Then for each of those aging groups, or what we call aging buckets, that is multiplied by the percentage of that aging bucket deemed to be uncollectible. Then the estimate for each of the aging groups is totaled to get the total needed balance in the allowance for doubtful accounts. So looking at ABC's schedule of accounts receivable, where the $100,000 balance in accounts receivable, each customer's account was grouped by how far past due the account is. Of the accounts that are not even due yet, management estimates only 1% of those will be uncollectible, or $645 of it. For the 1 to 30 day past due accounts, 3% are estimated to be uncollectible, or $555. What we're doing is grouping all of the customer accounts by how far past due they are. And then we're seeing that as the accounts become further and further past their due date, management's estimate of collectability gets worse and worse. The uncollectible percentage increases. So when we add up the totals for each aging group, or the amount expected to be uncollectible, the total is $5,320. We just calculated step 1 of the accounts receivable method. We need an ending balance in the allowance for doubtful accounts of $5,320. Currently, recall there is a credit balance of $900. So the amount of bad debt expense to record to get the allowance account from a credit of $900 to a credit of $5,320 is a credit of $4,420, or the difference between the current unadjusted balance and the desired ending adjusted balance. Again, the journal entry, debit to bad debt expense, credit to the allowance for doubtful accounts. That journal entry was the same regardless of whether we calculated the bad debt expense amount by the percent of sales method, the accounts receivable method, or the aging of accounts receivable method.